Okay, so what should we do with the expenditure that we have incurred on intangible asset item? All right, so expenditure on intangible asset shall be recognized as an expense when it is incurred, unless, all right, so basically all the costs that you have incurred in acquiring the intangible asset are to be expense of in SOPL. However, all right, however, that amount can be capitalized if it forms part of the cost of an intangible asset that meets the recognition criteria. All right. Or the item is acquired in a business combination and cannot be recognized as an intangible asset. If this is the case, the forms part of the amount recognized, okay, it forms part of the amount recognized as goodwill at the acquisition date. All right. Okay, so basically we are going to expense of in SOPL. But if it meets the recognition criteria, okay, then we are going to capitalize the amount that we have incurred as intangible asset and to be shown in the statement of financial position under non-current asset. Okay. If the items acquired in a business combination cannot be recognized as intangible asset, meaning that from the difference of the purchase price and also the book value of the business, you have some amount that you cannot attach to any identifiable intangible asset. So that amount will be recorded or recognized as goodwill at the acquisition date. All right. So purchase goodwill is allowed to be recorded, but internally generated goodwill is prohibited by the standard to be recorded as intangible asset. All right. What about the past expenses? Okay. Past expenses here is referring to, for example, the expenses that we have incurred during the research phase. But after some time, okay, after we enter the development phase and we are able to demonstrate that the product is going to be very successful. Okay. So after we have been able to demonstrate all of the criteria for the development activities to be capitalized as intangible asset, all right, expense that we have expense of in SOPL in the previous year cannot be, all right, you cannot reverse the process, okay, you cannot reinstate the expenses to be recognized as an asset. Okay, whatever that you have expense of in SOPL, okay, we are going to leave it as it is. All right. Expenditure on an intangible item that was initially recognized as an expense shall not be recognized as part of the cost of an intangible asset at a later date. All right. Okay. So now let's look at the subsequent measurement. All right. Subsequent measurement for the items of intangible asset which have been recorded in the books of account. All right. Okay, so similar to MFRS 116, okay, the subsequent measurement for intangible asset, okay, there are two models allowed by the standard to be adopted by the business. The first one is cost model, the other one is revaluation model. All right, so how do we calculate the carrying amount, okay, under cost model? Cost less any accumulated amortization and any accumulated impairment losses. All right, for the allocation of the cost of asset, now we need to change from depreciation, we need to change to amortization. Depreciation are meant for tangible item. Amortization are for intangible item. All right, so make sure when you give the definition, all right, for the carrying amount under cost model, all right, or revaluation model for intangible asset, okay, so make sure you do not use the term depreciation. You use the term amortization. All right, what about the revaluation model? Okay, under revaluation model, the carrying amount is carried at a revalued amount, which is the fair value at the date of the revaluation, less any subsequent accumulated amortization and subsequent accumulated impairment losses. If an intangible asset in a class of revalued intangible asset cannot be revalued because there is no active market, meaning that there is no fair value for this asset, the asset shall be carried. Okay, you can continue to carry, okay, the asset at its cost less any accumulated amortization and accumulated impairment losses. What if the fair value of a revalued intangible asset can no longer be measured by reference to an active market? Okay, so in this case, the carrying amount of the asset shall be its revalue amount at the date of the last revaluation by reference to the active market less any subsequent accumulated amortization and any subsequent accumulated impairment losses, meaning that if there is no market anymore for that intangible asset, okay, which cause us not to be able to get the fair value, so what we can do is to maintain the last revalued amount of that intangible asset in the books of account. All right, okay. All right, for the revaluation model. Okay, from the revaluation, there is a possibility that we get revaluation surplus or revaluation deficit from the revaluation due to the difference between the carrying amount of asset and its fair value. So what are the accounting treatments, okay, for the revaluation surplus and revaluation deficit? Okay, so let's look at the first one. The treatment, however, would be similar to MFRS 116 PPE. Okay, if an intangible asset carrying amount is increased as a result of revaluation, the increase shall be recognized in other comprehensive income and accumulated in equity under the heading of revaluation surplus. However, the increase shall be recognized in profit or loss to the extent that it reverses a revaluation decrease of the same asset previously recognized in profit or loss. Okay, so for the first revaluation, okay, it will be easy. If there is any revaluation surplus, then you transfer to, okay, you transfer to ARR. Okay, the amount of revaluation surplus you have to disclose in other comprehensive income, and then you accumulate in equity under the heading of revaluation surplus, which usually we record under asset revaluation reserve. However, okay, however, for the subsequent revaluation, we have to check whether previously we had any recognized any revaluation deficit in the previous year. Okay, all right, so we need to reverse the process first. Okay, if an intangible asset carrying amount is decreased as a result of revaluation, the decrease shall be recognized in profit or loss. However, the decrease shall be recognized in other comprehensive income to the extent of any credit balance in the revaluation surplus in respect of that asset. The decrease recognized in other comprehensive income reduce the amount accumulated in equity under the heading of revaluation surplus. All right, so here what happened is, okay, for revaluation deficit, okay, for first revaluation, it will be easy. Okay, any deficit will be recognized in SOPL as an expense. However, okay, for subsequent revaluation, we have to check whether do we have any revaluation surplus recorded in the previous years. If any, then we need to reduce first, okay, whatever balance that we have in asset revaluation reserve, okay, before we recognize the deficit in the statement of profit or loss. Okay, on disposal or retirement of a revalued asset, the balance in the revaluation surplus will be transferred directly to the retained earnings. Okay, so the balance that we have in the revaluation surplus, any accounts that relate to the disposed asset will need, okay, we need to close the account. All right, in case of asset revaluation reserve, if we still have the balance of revaluation surplus, then we need to transfer to the retained earnings. Okay, the revaluation surplus is regarded as realized. The credit balance in the revaluation surplus is transferred to retained earnings as a reserve movement and not credited to the statement of profit or loss. This will be reported in the statement of changes in equity only. Let's look at example number 7. Okay, so in 2011, Debit Pattern bought a patent for 110,000. In 2012, owing to the popularity of the patent, it was revalued to 130,000. In 2013, the popularity decreased, so the patent was revalued to 105,000. In 2014, the popularity picked up again, so the patent was revalued to 135,000. The patent was sold in 2015 for 150,000. It is the policy of the company to adopt the revaluation model for its intangible asset. Alright. Okay, show the journal entries to record for the above transaction. Alright, so before we prepare the journal entry, let's talk about the accounting treatment for the above transaction. Okay, so number one is related to the recognition of the patent as an intangible asset. The question is, can we recognize patent as an intangible asset? And the answer is yes, it is identifiable. Okay, because it is bought. Alright, it is bought from another entity, so it is identifiable, separable. Okay, it may arise from a legal rights. Alright, to use the patent. Okay, and then it is controllable as a result of past event, which is Dak Berhad bought a patent, so Dak Berhad has a control over the patent. Alright, so Dak Berhad is now the owner of the patent. Alright, what about the probable that future economic benefit flow to the entity? Yes. Okay, from using the patent, okay, there is a probable that the future economic benefit will flow to the entity, and the cost of the patent can be measured reliably at 110,000. Therefore, okay, the patent can be recognized as an intangible asset, and we may prepare an asset account for patent. All right. In year 2012, 2013, and 2014, we have been given an information of the fair value. Alright, so what are we going to do with this fair value? Since the company is using or adopting the revaluation model for the intangible asset, therefore, any change in the fair value will be taken into account. Alright, and then we are going to compare the fair value with the carrying amount at the revaluation date. Alright, okay, so what happened in year 2012? Increase. Alright, there is an increase from 110,000 to 130,000. Alright, therefore we are going to record. Okay, so in year 2012 we are going to record a revaluation surplus. Okay, in year 2012 we are going to record a revaluation surplus of 20,000. Okay, alright. Okay, what happened in year 2013? Okay, decrease in fair value. Okay, so in year 2013, the carrying amount is 130,000 and the revalue amount was 105,000. Therefore, there was a revaluation deficit of 25,000. Alright, so we're going to record that revaluation deficit of 25,000. What happened in year 2014? Okay, in year 2014, the popularity pick up again. Alright, so the patent revalue amount is 135,000 while the carrying amount is 105,000. Therefore, there is a revaluation surplus of 30,000. Okay, alright. So now we are going to record and what happened in year 2015. The patent was sold, okay, for 150,000. So the disposal value of 150,000 will be compared with the carrying amount of 135,000. So there will be a gain on disposal of 15,000. Alright. Okay, so now let's prepare the journal entry. Okay, because the patent can be recognized as intangible asset, so we are going to create an asset account. So on 1st January 2011, debit pattern, okay, and credit cash or payable, either one. Alright, so 110,000. Okay, and then we need to record the surplus. Alright, so how to record the surplus? Alright, we are going to disclose in other comprehensive income and accumulated in equity under the heading of revaluation surplus. Alright, so we are going to create an asset revaluation reserve account for this one. So debit pattern, why we debit pattern? Because increase in the value of pattern. Alright, so debit pattern 20,000, credit asset revaluation reserve for revaluation surplus 20,000. Alright, what happened in the following year, 2013? Decrease in the value. Okay, decrease in the value. So there is a revaluation deficit of 25,000. But before we recognize that 25,000 as an expense in SOPL, we have to check the previous revaluation. Do we have any revaluation surplus? Yes, we have a balance of revaluation surplus of 20,000. So we are going to utilize that amount first. So debit asset revaluation reserve 20,000. Okay, to reverse the previous surplus. Okay, all right, and then we are going to debit SOPL for revaluation deficit of 5,000. And then we are going to credit or reduce the asset value, okay, to its revalue amount of 25. We are going to reduce by 25,000. Okay, all right. In year 2014, okay, what happened? There is an increase or revaluation surplus of 30,000. Okay, so now we are going to record increase in asset, okay, by 30,000 ringgit. So debit pattern 30,000 ringgit. Okay, but before we can transfer everything to, okay, to asset revaluation reserve, we need to reverse the previous revaluation deficit recognized in SOPL of 5,000. So debit, not debit, credit. Okay, credit SOPL 5,000 to reverse the previous recognition of revaluation deficit. And the balance will be transferred to asset revaluation reserve, will be credited to asset revaluation reserve of 25,000. Okay, what happened in year 2015? No revaluation, but the pattern was disposed. All right, so credit pattern. Okay, we are going to derecognize the asset account first. So credit pattern, okay, of last revalue amount, which is 135,000 ringgit. All right, and then we're going to debit the amount that we received from the disposal of the pattern, cash 150,000. Any difference between debit and credit will be gain or loss on disposal. So in this case, because the disposal value or the cash received, okay, from the selling of pattern is higher than the pattern carrying amount, 135,000, there is a difference of 15,000, okay, which is the gain on disposal, okay, and the gain on disposal will be credited to SOPL. All right, and don't forget to transfer the revaluation surplus realized from the asset revaluation reserve to the retained earnings. Okay, so debit ARR 25,000, credit retained earnings 25,000. In addition to the revaluation surplus realized through the disposal of intangible asset, part of the revaluation surplus may be realized and transferred to retained earnings every year during the period the intangible asset being used by the enterprise. The question is, how much should we transfer from ARR to retained earnings? Okay, it is actually the difference between the amortization, okay, new amortization and the old amortization. All right, new amortization and the original amortization. All right, or revaluation surplus divide by the remaining useful life of the asset. All right, so there are two ways for you to calculate the amount to be transferred from ARR to retained earnings. So the first way is to find the difference, okay, between the amortization, okay, the new amortization and the old amortization. All right, or you can take the total revaluation surplus and then divide by the remaining useful life of the asset. All right, so let's look at one example here, example 8. So on 1st January 2015, Gading Putih Berhad bought a pattern for 100,000 with a useful life of 10 years. Amortization is based on a straight line basis. On 1st January 2016, the pattern was revalued to 180,000. Show the journal entry to record the revaluation of the pattern and the related surplus realized upon the usage for the year ended 31st December 2016. Alright. Okay, so before we prepare the journal entry, let's discuss, okay, of the question first. So can we recognize the pattern as an intangible asset? Yes, the pattern can be capitalized as intangible asset because the pattern met the recognition of intangible asset. Okay, the pattern is identifiable, controllable, and probable that future economic benefit will flow to the entity, and the cost of 100,000 can be measured reliably. Okay, the amortization was to be provided, okay, for 10 years, okay, using straight line basis. All right. And then on 1st January 2016, okay, the revalue amount of the patent was 180,000. Since the company is adopting revaluation model, okay, for its intangible asset, therefore the patent will be revalued. Okay, the patent, the change in the fair value, okay, will be taken into consideration. All right. Okay. Alright, so the question asks you to prepare only for year 2016, meaning that you don't have to show, alright, the purchase in year 2015. Alright, but before that, let's prepare the working, okay? Um, so, working. Okay. Alright, so when we prepare the working, we have to prepare starting from year of purchase, okay, which is starting from 1st January 2015, okay. The cost is 100,000. Okay. Alright, because we are preparing for year 2016, so we need to find the carrying amount on 1st January 2016. Okay, what is the carrying amount? Okay, so from 1st January 2015 to 1st January 2016, this is 1 year. So we are going to calculate amortization here for 1 year only. Okay, 100,000 divided by 100,000 divided by 10. Okay, 100,000 divided by 10, so equal to 10,000. Okay, therefore, on 1st January 2016, the carrying amount is 90,000. The carrying amount is 90,000. Okay, and then what happened? On the same date, okay, on the same date, the pattern was revalued. Alright. So on the same date, the pattern was revalued. So the fair value of pattern or revalue amount of the pattern was 180,000. There is a difference of 90,000. This is the surplus. Okay, this is the surplus, and then we need to continue our working up to 31st December 2016. Alright, is there any other things that happen in between? No. So no, then we are going to calculate the carrying amount. Okay, so in between we are going to provide for amortization. Okay, so how do we calculate the amortization for this one? Okay, we take the revalue amount, okay, 180,000 divided by the remaining useful life, so 20,000. Okay, so the carrying amount is 160,000. Alright. Okay, so for the journal entry, okay, for the journal entry, okay, the journal entry that we need to show for year end 2016 is number 1 is the surplus, okay, and then number 2 is the amortization, and then because the company is adopting a policy where they are going to transfer part of revaluation surplus, okay, to the retained earnings, okay, throughout the use of the asset. Okay, so we are going to prepare that journal entry as well. Okay, alright, so now let's look at the journal entry. Okay, so the first one, we are going to prepare the journal entry for a surplus of 90,000. Alright, okay, this is intangible asset, okay, with amortization. So before we proceed, okay, with the surplus of 90,000, okay, before we proceed with the record of surplus of 90,000, we have to eliminate the accumulated amortization. We have to eliminate, all right, any accumulated amortization. All right, okay, so meaning that you have to add another journal entry here, okay, which is debit, okay, accumulated amortization, all right, of 10,000. We're going to remove this one, 10,000. We're going to eliminate that. Okay, any amortization of the previous year are to be eliminated. Okay, before we restate the net carrying amount of intangible asset to its fair value. Okay, and then we're going to credit to pattern. All right. Okay, that is the first journal entry that you should do. All right, and then debit pattern, okay, for this 90,000, debit pattern, credit asset revaluation reserve. All right, okay, next is to record the amortization expense. All right, so amortization expense, debit amortization expense, debit SOPL amortization expense 20,000, credit accumulated amortization 20,000. All right, and then we are going to record the transfer, this one, surplus realized upon usage. Okay, surplus realized upon usage, meaning that we are going to debit ARR, okay, and then credit retained earnings. The question is how much. Okay, so how to calculate this one? So we can take the new amortization, which is 20k, minus the old amortization per year, which is 10k, so equal to 10,000. Okay, another way to calculate this one is, okay, okay, by taking the amount of revaluation surplus, okay, which is 90,000 here, okay, divide by remaining useful life. Okay, so there are two ways for you to calculate the amount to be transferred from ARR to retained earnings. All right, okay.